have in fact reported a first quarter that has been weak as project cost overruns and margin pressures sharply impacted profitability. However, strong order book, healthy backlog and growing opportunities in data centers could afford some support. The stock now 14% down. Before we speak with the management, Parth is setting it up for us with all the key takeaways. Very quickly, Parth, from the results.
Absolutely. So in Thermax, we saw a big hit in profit during this quarter, and that was because of the 91 crore cost overrun that we saw in the company's industrial infra project. Also, last year's quarter had a one-off 56 crore incentive income, so that is what is driving that difference as well. In the company's industrial project segment, because of low export sales and high input cost, we saw some impact on the margins as well. And in the green solution business, we again saw some of the project overruns, and that has impacted, that has widened the losses for them as well. If we look at the industrial segment a little bit more, then because of the project completion cost, we saw that 91 crore impact, and the PBIT has fallen to a loss of 71 crores versus a profit of 83 crores year on year. On the industrial product and chemical business, industrial products margins have fallen to 6.1% versus 8.3% year on year, and this was again because of the low export sales and higher input cost. And on the chemical business side, we have seen better volumes and increase in profitability.
We will have all those pointers on our screen as well in case you missed Parth running through it. But Mr. Ashish Bhandari, MD and CEO of Thermax, with us. Ashish, very good morning to you. Thank you for your time on NDTV Profit. Let's just try and understand what's happened this quarter. And you might have heard some of the commentary before we led into this conversation where there were high expectations. There seems to be a cost overrun. Is that the core issue? Just want to understand what's happened across segments.
Sure. Thank you very much. And of course, it's been a tough quarter. It shows up in the numbers. I'll do both, explain what happened in the quarter itself, and then also share confidence for the rest of the year and why I think it can still be a very good year. Let me start with the quarter itself. In the quarter, we had a couple of things that did not go as we would have expected, the biggest of which was on one particular project. And this is a set of projects that we have said are not things that we want to repeat. This is actually a project from 2022, and it's in its final year of execution, where on the ground, there was a big engineering change, which came about in June. And because of this change, the cost to completion of the project has increased significantly. And this cost to completion of the project, which is 91 crores, is something that we are taking hit on in the quarter itself. And this will get executed over the next 4 quarters. And that's how this additional cost will come into our numbers. But we are taking the hit now because this was already a loss-making order.
What is the prime reason for this cost addition? That cost of completion addition that has come in? And I understand that you're front-loading the hit so that it's not there through the year. But what is the prime reason?
So we have shared previously also that there were of the areas of Thermax which we want to fix and not repeat is a set of projects there which are government-related with high civil and construction areas. And in one particular project, which is our biggest, it is our NRL Self-Recovery Unit, where we have an engineering partner. And that engineering partner in the late hour came back and said, no, we need to do some engineering changes to deliver what we need to for the customer. That became a point for us to take a step back and take into account that this particular change and some other changes also will result in the site running longer. We have to expedite the site to meet the customer's requirements. So taking all of those into consideration, the cost of completion between now and end of the project was projected to be this 90 crore number, which is what we took a hit on.
Mr. Bhandari, you were explaining the other factors that have played out in the first quarter. And good morning, this is Alex here. So you've talked about this one project in which there is this 91 crore front loading that you've done to account for the unforeseen issue that you have just explained. What else has occurred?
So there are two other factors that have occurred. And one of which is our deliveries, which if you take a look at our backlog, and as I talk about why you should still be positive on Thermax, our backlog is quite significant. And nearly 300 crores of what we thought we should be able to ship and equipment that was ready. A lot of it relatively higher profitability because it was meant for exports, and quite a bit of it for the Middle East. We just could not ship because of shipping rates and some of the effects of the war itself, where customers were not ready to pick up the equipment. And it wasn't right to push that, at least in Q1. In future quarters, we will do so. The second reason was commodity prices had some impact, close to about 10 crores, where in our industrial products business, where we have to turn around products relatively faster, both in our water business and enviro business, which depend a lot on steel and plastics, etc., commodity prices went up. Lastly, FEPL, which is where we do wind, solar, renewables business, that continued to face headwinds, couple of project executions, a big one in Tamil Nadu, where when the government changed, some of our projects which were complete were put on hold because the last approval wouldn't come from the government. So all of that came into the numbers. The three things that we are committed to delivering this year. Yeah, one is the kinds of these large projects that we have. This is the last year of execution practically, and I've been saying that for some time. With this, all of these legacy large projects with relatively low profitability should be off Thermax's books. Our wind, solar, renewables business, which is FEPL, we will cut down our exposure to that business, and we'll bring in external partner. We do think we have put a good set of assets together, but this is not Thermax's business long term. The third area is our bio-CNG business, which to all open issues we will resolve this year. So this year is the commitment on what I've been saying for the last several quarters of some of these legacy issues that we have that we will resolve and clean up our books and our numbers on that front. Why should you still be excited about Thermax? I would give you multiple reasons. First,
we'll talk about that in just a bit, Mr. Bhandari, and I'll be sure to ask you about that. But I just want to delve a little deeper into some of the issues that you have highlighted to us. Because I remember very clearly in past conversations, you've highlighted the fact that some of these businesses are being unwound and will go off the books eventually. It has a bearing on margins, and those margins will be scrimped till the time that these legacy businesses will continue to be on the books. So the way that you're describing it, a couple of issues have occurred which you did not anticipate, and this is going to carry forward into now 4 quarters, right? The Tamil Nadu issue that you have, so you've said that this legacy business, 91 crore rupees, you're going to execute it over four quarters, right? Is there a possibility of any further cost overruns there, or are you done with it? That's the first point. Second, on these Tamil Nadu orders that have gotten stuck, is there any word on whether this is going to restart, what the implications of cost will be in the rest of FY27, and do you anticipate that what you thought would occur in the third quarter would now have to be pushed forward perhaps into the fourth or maybe the first quarter of next year?
So I'll take all three questions one by one. The first one on, do I anticipate anything further on these projects? What we have right now is hopefully a no. Yeah, from the engineering partner, we have a written statement saying all engineering is formally complete from their point of view, and no changes are expected. In the number as well, we have taken sufficient contingency, and we have some change orders that we expect from the customer. So net, as I see things, and I can't guarantee 100%, and surely we haven't been good at guaranteeing anything on these kinds of projects, but I can say with a fair degree of confidence that we don't expect anything else to show up on this particular order. On Tamil Nadu, which is on our wind, solar, renewables business, again, there is a high degree of expectation that within a week itself, we should get the necessary approvals, which means there would be a delay of a quarter, but some of these issues would be behind us, and the assets would then start producing and move from being kind of in the negative category to then the positive category. So on both parts, I hope I've answered the questions that you have.
Okay, Mr. Bhandari, I think it's only fair we now come to why we should be excited about Thermax. I'm just going to add one more question before I, request you to speak about it. You said we are in a cleanup process, and from everything you've been telling us, this is a bit of a phase of reset for the company, or exiting, spaces which didn't work for you. There's a bit of cleanup happening. What is the timeline of that cleanup, and why should investors be excited?
Okay, so the cleanup is not like it is multiple quarters. Here we have delivered the numbers that we did last year, carrying some of these businesses. Yeah, and we will, Q1 should be an anomaly. Starting Q2 onwards itself, you should see a significant improvement. And I'll share why I'm bullish on the year as a whole. Let me take one by one on some of the areas. First, on revenues, you would see our backlog itself now is more than 14,000 crores. In that 14,000 crores, the portion which is of these areas that we don't like is now less than 400, which means it has come down to less than 10%. And in this particular year, we would want to bring it down to zero. Our legacy projects around FGDs, some of the other government projects are all practically done now. NRL is the last remaining project, which too, we have taken the hit that we had to against that project. And now we have shown previously also, when our revenues cross 3,000 crores, we are able to deliver a good amount of profitability. That will become the norm going forward. We have the backlog to be able to deliver a 3,000 crore plus kind of a revenue number on a continuous basis. And this backlog is more and more profitable. It has quite a few international projects. And as these international projects start to convert into revenue, the profitability jump will also start to show up. Yeah, and we have got a lot to recover. I do believe both on revenue and profitability. After Q1, we will see a significant improvement, driven both by kind of the quality of orders that we have taken, and on the revenue side, just the backlog that we have that we can deliver. I would also say on the orders, while this quarter showed as if we had just a 2% orders increase, our pipeline of our opportunities continues to be extremely good. And while last year we grew our orders north of 30%, I am confident that this year we will grow our orders even on top of what we delivered last year, because in every part of the business, we have a significant opportunity pipeline driven by growth in Middle East, Africa, data centers in the US, domestic thermal coming back, multiple portions of our business seeing a good amount of tailwinds. In some areas, there's pricing pressure as well. Even our chemicals business, which went through a year of tough numbers, some of our volumes are coming back, where our international customers that we had lost, the volumes are coming back.
Interesting.
So I see good opportunities as we go forward. Quarter one wasn't something that we are proud of. It was a bad quarter, clearly. But it isn't reflective of the business that we have, and certainly not reflective of the future that we have.
We appreciate your candor as always, Mr. Bhandari, and we look forward to speaking to you at the end of the second quarter. And hopefully it'll be a dramatically different conversation to this one. Thank you so much for taking the time.
Thank you.
Okay, Aarti Industries.